Welcome back, financial forecasters. Today we're settled. We're in our new home. We got our finances back on track. Fresh start today. We're going to show you what's in my portfolio, about $140,000 invested, where's it going, what I wanted to do, and my goals for the year. So we're going to look at what I'm invested in, where my dividends are coming from, and what my goals are for the year and where I hope to be by December 31st of this year. So if you're ready, blank start, new house, new life, new financial forecaster. Let's get into it. Let's see the portfolio. All right, guys, so as I said earlier, I have about $140,000 invested. $135,000 of that is in straight stock equity. Now, a lot of people say split between your equities and your bonds to have a 60-40 portfolio. That's a little old school investing for me. Even like a lot of people just say have some exposure to bonds just in case there's a downturn in the market. But the way I'm investing is a little safer than that, just because I have a lot of my portfolio allocated in some very safe dividend portfolio and returns. So that's the way I kind of supplement my bond position. I have a lot of my portfolio in more of the safer positions. And the very first on the list is the surprise to nobody. My biggest investment with $14,000, I have Fortis, the best dividend, safe, lines, power, growth company. Fortis is a powerhouse that has been paying off. The last 2 months, it's creeping up, and it's creeping up. A lot of those Canadians out there with Fortis in their portfolio know it is a stalwart, it's safe, it's lovely. So I have almost $14,000 in that position. It's dripping every quarter, and I hold it in 3 different accounts. I very much love my Fortis portfolio. So next we have a Bank of Nova Scotia. Guys, I bought this at the sweet spot when the banks were hit. Everything else was recovering, but the banks were still down, offering an 8% dividend. We have the Bank of Nova Scotia, and I have just over $12,000 in Bank of Nova Scotia. I locked in a great yield. I'm 25% up in this position, and I could not be happier. Now, a lot of people out there are like, should I still be buying banks? You know, it's a sweet 4 to 5% dividend. A lot of the banks are very fairly priced right now, and especially when they get to unlock those capital requirements in the Bank of Canada, or the governing body in Canada that governs the dividend raises, gives them the go ahead. You know that they're going to be buying back shares and they're going to be increasing the dividends. So I would still say any of the banks, TD, RBC, Bank of Nova Scotia, are great buys right now. I also own TD, but even a good bank ETF, banks are one of the safest bets, best dividend, and good growth. You just have to look at one of their quarters to know that the growth is still there and the mortgage market is holding up. So Bank of Nova Scotia up 25%. I love it, paying out a lovely dividend. I believe the dividend I just got last month from Bank of Nova Scotia was upwards over $140. So that's fantastic. Okay, number 3 on the list. Number 3 on the list is TAT. Now, guys, it has been making a comeback. It saw lows of $3. I was buying then. It trickled up to $3.20. I was buying then. And now it's all the way up to $3.60. I am 10% down on my position. But that is to be expected in a growth stock, highly volatile. It's a company that if you're not watching every day, if you're not following the progress of the company, please do not invest in a speculative stock like this. The reason I feel so comfortable doing so is because I'm watching every day. I'm doing my research. I'm on forums. I'm on Facebook groups. I'm on anything I can do to watch the progress, know where my money is, and watch how the company is going to be valued. So in TAT itself, I have $9,200 invested. I'm very excited for this. This is my main growth driver of the portfolio. If you're going to be buying a lot of safe, steady dividend payers, then you also want some highly speculative growth stocks if you're looking for any type of growth when you're younger. Again, these aren't the greatest stocks when you're pushing over your 40s, because you want your portfolio to be a little less volatile. You're focusing on keeping your money, not making more of it. But right now, I'm just worried about making more of it. TAT, I have full faith in right now. I think Seti Coscarella and Joe Deegan are doing a fantastic job. They're hitting the trade show circuit, and I just bought $600 more on Friday. So I'm very happy with that. TAT is number 3. Okay, number 4. With just a smidge over $9,000, we have RioCan. I was still loving it. The earnings report came out and it was phenomenal. I think they're back up to like 97% rent collected. The core businesses that were affected mostly during the pandemic are starting to recover, and that is absolutely fantastic to see. I still like RioCan. I still think they're not a powerhouse growth stock. They're a great dividend, very safe as they've cut it, but now it's very safe. You can see their FFO is starting to recover quite nicely, and I see no reason why their FFO won't keep improving over the years. And so RioCan, it's a love of most Canadian stock investors. It's one of those companies where you can see working out in the day-to-day life. They're moving a lot more into mixed assets. They have some of the best locations in Canada, and I think RioCan is a great part of my portfolio. I will never sell a share of RioCan. I watched with a broken heart when Passive Income Investor did it, but he only sold a small part, and he tried to tell everybody that only a small part of his RioCan just to rebalance his portfolio. And you know, guys, that's a great idea. I'm never going to argue against rebalancing your portfolio, but to me, with how I am and how in my portfolio, I will never sell a share of RioCan. I will just be dripping shares every single month, buying a few more shares for my portfolio. Okay, that's number 4. Let's go to number 5. Number 5 is TELUS. Again, they came out with another earnings report. All of the Canadian, boring stocks, sometimes the best stocks for your portfolio. I cannot tell people this. A lot of people, GameStop, AMC, all of this is just noise to me when you can find these companies that have solid growth, are still growing, paying an excellent growing dividend. TELUS, their healthcare section, their security section, record number of some new subscribers. Guys, this is a great company, great dividend that will be rising 7 to 9% over the next couple of years. Great capital expenditure and definitely capitalizing on the 5G. If anybody is just making a portfolio right now, just starting to get investing, TELUS, ticker T or TU in the States, man, it is a great company and it would probably be my largest telecom recommendation. They just have so many verticals of growth that I'm really looking forward to seeing where they're going. And this is another stock that I probably will never sell. Okay, that's TELUS. Next. Boy, did I get in at the right time for this one. Another real estate company. I know I've got a lot in my top 10, but I really enjoy the dividends, the stable growth, and the transparency when it comes to their balance sheet. So granted, I'm up 15% on a stellar dividend grower, stellar dividend payer, 100% rent. This REIT has 100%, all of its leasable space is leased out, and I have $8,000 in it. Again, at this price, perfect to get in now. I love the price it's at, where the company is going. Even if it's stale for the next year or two, you know it's paying that dividend. It's a good anchor of any portfolio. I love Granite. It's fantastic. Okay, next stock. Number 7 on the list is another growth play. I have 2 main growth plays in my portfolio that I am betting heavy into, that I'm looking for good returns, and just over $7,000 we have Well Health. This is a little safer than we have with TAT, but TAT is my home run play, still a penny stock. I don't think at this point we can call Well Health a penny stock because they have established that they are in the mood of making a company that lasts for the ages, that's growing, acquiring, and just having a great time doing so. Their balance sheet is looking fantastic. We're expecting great earnings, another blowout as they have done quarter over quarter over quarter. What a great company. Well Health, you know, they're gathering clinics, they're doing the online thing, they have their EMR, they're doing fantastic at digitalizing a business that has been left behind for years. It is a very smart strategy, and it is a company that I am never afraid of adding on any dip. I know that it's going to, I don't know, but I can guess from reading the earnings, seeing the trajectory of where things are going. I think Well Health's a really solid bet still, and I'm still buying Well Health. I bought a lot last week, and I will still buying, putting it in my taxable account now. But what are you gonna do? You're out of space, right? So, Well Health Technologies, fantastic. That's my second pick. Number 8. Now, I never expected this to be one of my largest growth stocks ever. I just bought it at a fantastic price, and it has been skyrocketing ever since. Now, I have learned, especially in this space, after I sold a lot of my Square about a year and a half ago, which was a terrible choice. I sold half my position, and that was a terrible idea because Square is up 400% on the position I have left, and it really hurts. So I will not learn. I will learn that lesson, and I won't do it again. So Lightspeed, Lightspeed is this crazy POS system. They're coming up against Shopify. They're biting at all the growth. They're doing fantastic. You know, their earnings aren't there yet, but the revenue growth is still killing it. And Lightspeed, I hope, is over $7,000 now, which was just at a beginning position at $2,000. So I was never expecting this to be a giant position in my portfolio. Of course, I wish I put tons in before, but I'm very happy. I won't be selling a share of this. Sometimes when it was over 110, I sold 1 or 2 shares, but just to add some more money in my portfolio, take some profits, buy some more dividend stocks with it. Guys, Lightspeed is one of those stocks that has just crept under everyone's radar. It's going to be a powerhouse, I think, and it's already starting to show that with the share price. Lightspeed, fantastic. Moving on. Again, just because it's a safe stock doesn't mean you're not going to get fantastic returns with it. And I must have jumped on the boat right at the perfect time with this one. I covered it a few months back, but TFI International, the trucking and logistics company, I am up now over 50%. I am up 53% with now a $5.87 thousand position. Incredibly happy with this. I've been thinking about even selling it, taking some profit because the dividend is so low, but after going through the balance sheet, this company is on fire. They're taking other companies, especially UPS, they're maximizing the profits they can get, and they are a cash flow juggernaut. This is a company, I believe it's out of Montreal, that I definitely know it's out of Quebec. I'm not sure where, but I know that the management has been doing this for years. They know exactly what they're doing, and they're executing quarter over quarter. TFI International, it was a lovely pickup. Would I pick up any now? Hey man, the share price keeps going up. Investors seem to like to keep picking it up. So that's up to you on that one. All I know is it has been a fantastic performer for me, and I think I'm going to keep my shares in there just because I see in a couple years easily this being a $200 a share per stock. They're definitely going to be raising their dividend, in my opinion, and I think there is some definite room for growth. This company's not going anywhere. It has a huge percent of the market share. TFI International, fantastic. Next, and I never thought I'd get to say this, but I'm up 100% on my Aritzia position. People were saying and staying away from retail like it was the plague during the pandemic. Like they couldn't see 2 years into the future. I have no idea. With every single time you go into a mall, especially here in Canada, I'm not quite sure about how the Aritzia is in America, if you have the same problem, but I know every time I go see the mall, there's a lineup of people outside of Aritzia. This is before the pandemic too, and this is now when malls are reopening. I still see the same lines getting into Aritzia. I'm up 100% on that position. I'm not gonna be selling a share. I think their growth metrics are great. I think they're doing the right thing. And if I'm gonna have any exposure to retail in my portfolio other than RioCan, I'm glad it's Aritzia, doing a great job as a company and definitely meeting market demands. Especially when you're coming to a closed company, they're adjusting with their times, they're staying trendy, and they're keeping those profit margins very nice. So Aritzia, fantastic. Would I still get in now? Probably. Don't look for any stellar returns. I'm not expecting to go up another 100% in any couple of years. But 5 years down the road, if they're still chugging away, they're still doing all the right things, and they're still hitting that addressable market like they need to, especially if they hit a grand slam going into men's apparel. I could definitely see this being about a $50 stock, but that would take, I think, in my opinion, over the next couple of years, probably about 3 years to hit about $50. I'm gonna keep it in my portfolio. I love the company, but Aritzia, its growth days are behind it in the stock, I believe. I'm not gonna sell it because it's just such a solid company. What great management. All right, next stock. Next stock, again, Square, up 455%. I got $5.2 thousand in it. Fantastic. What do I have to say about Square? Is it a buy now? Yes. Was it a buy then? Yes. Is it gonna be a buy in the future? Yes. It's going to surpass PayPal. It's going to surpass many banks. They are doing, Jack Dorsey is a madman with a dream and a madman who can execute, lets his team do what they need to do, and he kills it every time. Square, what can I say about Square? This is an investment channel. If you're in an investment channel that you know what Square is, and it's a great pickup. It's one of those, it's going to be a mega cap, guys. It's going to be a mega cap. It's going to run hot for years. They are making all the right moves. Square. So next. All right, we're gonna start doing rapid fire. These are positions that are under $5,000, so I don't wanna spend too much time on them, but I wanna give them to you one at a time. Okay, here we go. We're gonna rapid fire them out. We've got Algonquin Power, 3.5 thousand. I am up 5% on that position. It's a dividend, it drips, it's fantastic. Next is my smaller, more speculative play. Probably don't have enough information to say if it's a good or enough. Like, I believe it's gonna make it, but we need to see them execute. That's Banksa, which you have about $3.5 thousand in Banksa. Next, Chemtrade Logistics. It's great dividend. It's a very risky stock because we don't know how they're going to go into the reopening. They're paying down a lot of debt. That's great to see, and we want to see that company keep perform. So that's Chemtrade, 3.2 thousand. I'm only down 0.2%, but it has been dripping and paying a dividend steadily for months and months and months, and that's what that's in there, that portfolio to do. I want the free cash flow coming in. I want those extra shares every month. I love that stock. Brookfield Renewables, I'm still down on this position. So I think right now is still a great time to get in more. I have a lot of money in my utility sector already, especially in my dividend utility portfolio. So I'm not going to be putting any more into Brookfield Renewables, but I think if you guys want to, especially at this price, hell, anything with Brookfield in it, you know, is a powerhouse of a company. We have my Vanguard Canadian ETF, my VRE, which is the REIT capped ETF. It's doing fantastic. It's 37% up. What else are you gonna ask for? I don't have a huge position in it. $2.83 thousand pays me a monthly dividend. Fantastic. CT Real Estate, Canadian Tire, fantastic. One of the safest REITs you've got, 2.45. H2O Innovations, still down 16%. It's made some recovery. I made much too much of an investment at $3. I didn't see the sector downturning as hard as it was going to, especially with the numbers of growth. Let's hope their next quarter can bump it up. Green Lane Renewables, still down 34% on that. Need that one to turn around. I would love for it to, because we're gonna get earnings soon, especially with ZBEC. And I really hope this one turns around. I think if I break even with that, or even look for a 10 to 20% profit on that, I'll be out of that stock just because I think I have other places to put money. That money, it's a fantastic company. It's a very environmentally, socially responsible company, and I think what they're doing is incredible. I think I would just like to be more in TAT, more in Banksa, more in Well Health. No, nothing wrong with that company. I think it's poised for great returns in the future. Kirkland Lake Gold, again, once I break even, my break even point I think is about $55. I'm just looking, I bought it initially for an inflation hedge. The dividend isn't quite where I want it. Obviously the growth is tapered off, and with gold being so up and down, I think I might switch out of Kirkland and put that money into Bitcoin. I think that's where I want to go as an inflation hedge. Brookfield Infrastructure, $2,000, up 27%. It's another Brookfield Infrastructure, great dividend. Nuvi, I wish I had more money in Nuvi, man. What a company. Online gambling, POS systems. It is a great stock, and it is exploded. And I am up 66% on that position. Fantastic. Sun Life Financial, I will build and build and build. I'm up almost 6% on this great dividend paying insurance company. Fantastic. ZBEC, down 60%, was buying way too high. Obviously had diamonds in my eyes when I was looking at the growth, and I got bit hard. Now, have I bought any more? I bought a little bit to average down as on the way down, and I will wait to recuperate my position. Same with Green Lane. I will probably be out of it eventually when it hits $8, $9, or $10. But until then, I can wait. I'm in no hurry to sell it. I will not take a loss, as I believe there's a great foundation to this company. Toronto Dominion Bank, I own 1.5 thousand. Again, up 42%. We'll never sell it. Great yield on cost. Canadian Western Bank, another fantastic, one of the longest dividend raisers in Canadian history. RBI, $800. Acon, $740. Canadian Utilities, $562. Kraken Robotics, I'm down 31%. That one kills me at $550. Then everything I have under that is under $500. Not even worth talking about. But guys, we got my Bitcoin, my Ethereum. I have I believe about $3,000 combined. Some in Wealthsimple, some in just an Ethereum wallet. They've seen great returns. I've been averaging down a little here and there, but again, I'm not super into the crypto space right now, other than Banksa, and just my exposure to Banksa has allowed me to follow along in the crypto space. So that's my portfolio, about $140,000 worth. What is my goal? Well, I'm at 186,000, 187,000 net worth right now. What I want to hit is $200,000 by the end of the year. Am I going to do it? I think so. That's only 13 more thousand. I got about 5 months to do it. I think I can do it. I'm very optimistic I can do it. Hey, maybe I might even overshoot it. But with dividends coming in, you know that I'm compounding that interest. So financial forecaster, thanks for looking at my portfolio. If you cared to look at it, I really appreciate it. If you like my portfolio, hey, leave down in the comments if you liked it. And if you didn't like it, if you think it was trash and you would if you would tell me to dump something or buy something else, tell me down there too. Nobody's portfolio is perfect. Everybody has a different portfolio. So if you don't like it, tell me. I'll go back and forth with you. That's the financial forecaster. Next video, we're gonna do how much money I make in dividends every month, but I believe we're about $3,500 annually. Let's get a monthly breakdown of the next. Getting Rich Together, financial forecaster. Thanks for joining me, guys. Out.